Hello, everyone. Welcome to the next session where we're going to be talking about enterprise AI investment trends. We have general partner of Stresswood, Earnest, and general partner of Kubera Venture Capital, Balaji Gopinath today. Welcome.
Thanks for
Hey,
having me.
how are you?
Good. Let's start a little bit by getting to know both of you and learning about your investment thesis.
I can go first.
Yeah.
I'm general partner of Stresswood. We are a Series A early B firm based in San Francisco. And we're a generalist fund, and we focus on the best and brightest entrepreneurs that are looking at creating either new categories or enhancing industries that typically haven't gotten much technology. So we're across the board. We each have specialties, and I'll be speaking on this panel. My focus is over the 11 years I've been in venture, have always been around vertical software, applied AI, B2B marketplaces, and tech-enabled services across different industries in North America.
Okay. Well, my turn, I guess.
Yeah.
Balaji Gopinath. I'm a general partner, co-founder at Kubera Venture Capital. We invest exclusively in applied AI, machine learning, and data. And background for us, my partner James and I have known each other for 20 years. We made our first investments together as angels in dot-com time. I got my mentorship early on in venture from a guy named Don Valentine. If you know the name, one of the co-founders of Sequoia. Our careers have progressed both as operators and investors since then. And this particular fund has been focused on AI, machine learning, and data long before AI got sexy, when it was really a lot about data itself as it moved towards the machine learning path and then into the true AI path and now agentic. And so we invest vertically, horizontally across industries in an area that we call ingredient technologies, which is a layer above infrastructure.
I want to start by asking, in the past 2 years, have there been parts of your thesis that you've abandoned or changed, and can you explain why?
I'll go first. I think we're in a age of just newness and unprecedented times. I think I've said unprecedented times this decade more than I said in my entire life, or learn SAT words or whatever. Um, and I say that because when I got into this industry, and being an traction stage investor at Series A and Series B, it was more about a specific, not only if you figured out your type of company that you like, whether it's like stage, region, whatever. It was really standardized on like what a Series A deal looked like, what a Series B deal looked like. And there were archetypes that you could, have different opinions on. But now, as we have left the SaaS era and are fully into the native AI era, um, I've had to constantly get better at questioning old paradigms and picking up new ones. And so now I believe at my stage, and it's kind of similar. I've said this before with friends. It's similar to like how basketball has changed. When I was a kid, the positions were very structured. A point guard does this, a shooting guard does this, a power forward does this. And now things are blurred where you just have a ball handler, you have some wings, and you have a big guy. And all of them can dribble, shoot, and pass. And so it's similar at kind of Series A and investing. What I've seen is what I've had to adjust is what type of company or what track they're on. Now, how do I diligence it? So if it's a coming out of a spin out of an AI lab, and it doesn't have much revenue, but they've already raised a lot and have some traction or excitement. All right, what type of Series A is that for me? And now I'm putting it in that class. Where there's okay others that have had more traditional, like, oh, we've grown this way over the last 4 years and we're at 3 million ARR. all right, now let me judge this from there. And then that's not even like with the entire matrices of like different regions, different product types, different industries. And so what I'm getting at is you have to be way more of a creative thinker, um, and a hell of a good stock picker now because it's not as standardized of like, okay, venture investing kind of was like Mad Libs in the past, where it's like you fill in this and this. Now we have a paragraph. You can't do that anymore.
Okay. In terms of our what have we abandoned or diminished, I think that that area of ingredient technology is one we scrutinize more than other, and it's partially because LLMs are moving at a different speed now, given their valuations and how they have to live in their valuations, and people expecting them to have a considerable revenue path for themselves. They're encroaching in a lot of areas where developer tools and some of the building tools once existed. So they are releasing APIs faster than not. They're starting to verticalize. They're starting to get better data sets themselves. So that area, and we've seen this even within our portfolio as well as across the board, that layer of developer tools and infrastructure, most of those games have been won. There are a few opportunities still at the infrastructure level, but most of those games have been won. We continue to look for stuff in the vertical space because that's predicated on domain-specific data. And data is the life and blood of AI in general. In the horizontal space, we're selective, but we still think there's opportunity there in terms of where you can go to market. But in that ingredient level, even the agentic building level, that is getting played out faster than you can move. And if you look at the number of tools that were out there last year, I'd say half of those companies are already in some level of process. There's probably going to be some consolidation there. And then that's where things are moving.
Yeah, and to that point, Balaji, I think one thing I've noticed is so much excitement from just AI from the enterprise customer base, whether you're mid-market all the way up to enterprise. We saw over the last 2 years a lot of companies getting revenue, right? And now we're starting to see not the total AI dollars and spend decreasing, but like you said, starting to consolidate. I've seen this in the agentic, just legal vertical software space, the vertical AI space, with Harvey starting to really kind of take the lead in that. And you're going to start to see that in other areas, whether it's healthcare, manufacturing, supply chain as well. Um, because I think if you're a public CEO or even a mid-market CEO today, you can't go anywhere without at least mentioning that you're trying out technology and AI. But as they get smarter to like what they actually want to do, what are the right workflows, what is their kind of middle management resonating most with as tools, then you'll start seeing that consolidation. And so
Well,
all those things go into your diligence.
I think AI is the existential threat and opportunity for enterprises as a whole. And how enterprises can unlock that potential is predicated largely by management and what's driving from the top, what the mandates are. There's, as Sena, as we've talked about before, there are really three types of AI. Those that are going to redefine jobs fully, and those jobs will disappear in full automation. Those jobs where it's going to level up the new graduate or the 2 to 3 years experience into the same competency as that 5 to 7 year experienced person through more intelligent decision support, business intelligence, and kind of human assisted piece. And then there's the elite piece where you're going to have many years of experience, domain expertise in order to add value. And I think in the next couple of years, and why you see all the job reports the way they're going, why you see all the layoffs is enterprises are trying to figure out what does the right size organization look like, and where can I use AI, and where do I need people, and what's going to make sense for me in terms of this right sizing of an AI organization in the next 2 to 3 years. And a lot of that is experimentation happening now, not necessarily from a technology standpoint, more from an output standpoint. Am I getting the same output or better?
Hmm. Hmm.
Um, Now that we've touched on that experimentation piece, we're seeing a lot of let's say easier conversion to pilots on the enterprise side, but very difficult for, full procurement or scaling in the enterprise. Um, first of all, are you seeing that? And if so, especially on the earlier side, how is that changing the investment game?
So let Ernest go first, then I'll opine my 2 cents.
Um, for me, my answer is still is pretty short on this, but I'm starting to see I don't even whenever I use the word bifurcation, it makes it seem like it's 50-50 when it's not. It's probably like 10%, 90%. Um, but I'm starting to see that there are certain companies, whether they get part of the zeitgeist, catch lightning in the bottle, are starting to just blow my mind on what I once thought was possible when it comes to enterprise sales or being able to go from pilot to conversion to expansion in industries that have always been labeled kind of no man's land, right?
Yeah.
And so I've seen that in legal and healthcare, um, in just some large enterprise horizontal sales. And so I'm still trying to I'm still trying to figure out what is the exact thread on what makes those companies versus other companies not be able to go to this kind of not even hockey stick, but just completely like rocket ship. And there's still a debate on like how long will that last? Is it sustainable for their moats? And so what I've seen is yes, that story that narrative that presented in the question, that's still probably 80, 95% of companies.
Yeah.
Um, but they're starting to become a lot more that are able to break through in ways we've never seen before.
My perspective is a bit different. I think enterprise sales are enterprise sales. They're never quick, and they're going to take anywhere from 6 to 12 months to happen. So you're always going to see some level of pilots, POCs happening for validation, and then moving into full adoption based on how you structure the POC, what you're testing, and what group you're testing with. So I don't see that going away. Who comes out on the other side will largely be based on what value that I bring to the table, right? From a cost basis or a revenue basis, predominantly. Assuming that everybody's going to give you some level of productivity and efficiency increase, which usually happens in year 1 or 2, you get a big delta. The additional years of huge efficiency gains will probably be much smaller. That being said, I think if you look at the developer side of things and the technical base, those tools are getting adopted very, very quickly because it's pretty clear across the board and everybody's restructuring. Even the big four and all the consulting companies are adopting AI tools because you can do more with less people. And
Yeah.
programming teams of 30 are probably going to be programming teams of 10, because they're going to be more efficient. And it's going to cause some other roles to happen, but that is definitely the case. As it relates to the businesses, I, I think it's largely predicated. I'm going to go back to being a broken record on this on data. There's a lot of data within the walls of enterprises that have been collected, but is not necessarily useful. There's not there's dirty data is dirty data, and if you can't make use of the data, your AI is going to fail, and anything you do in that path is going to fail. So until you fix those problems, the governance problems, and have clear paths on what you want to do, AI is not a fix-all.
Mhm.
And that's, I think, some of the educational components of what is AI and what is it not. It gets
Hmm.
lumped into a lot of different things. There are automations people call Gen AI, people call it this,
Yeah.
people call it that. So as those start to specialize and people get a better understanding of what those tools are and what they can do, I think you'll start to see better success rates from POCs to full implementation and then adoption. I think it's just, a matter of time. I think 2026 is going to be a pivotal year for this. I think 2025 was the year of experimentation, and 2026 is going to be years of really getting into the production side and out of the innovation groups and the POCs into the true business lines.
Are there any verticals where you would like to see more founders build?
Yeah, there's a ton. I think seeing more in manufacturing,
Mhm.
in real estate, um, in in construction, in logistics and supply chain, which I've spent a lot of time in early in my career. Um, there's still a lot. There's a lot of the world is ran and conducts business in those areas. And everyone who's probably at this conference has seen the stats about kind of where the demographics of the tribal knowledge and labor is going. And so there needs to be something done. Um, I also think, within healthcare, healthcare is experience not only preventative, but like what's going on today and how healthcare businesses are ran. They are vital to literally to individuals and population. And so how can we put them in the best position thanks to technology to
Mhm.
serve all populations? So those are a few that I constantly look for and are interested in seeing people go to.
Yeah, I will echo the health area as one of the biggest opportunities for AI. I think the founding team needs to be a little more robust. I get pitched often by doctors who outsource the full development, or I get developers and very smart technical people who are going to learn about the healthcare system. They think they're the black swan that's going to disrupt it. Unfortunately, our healthcare system is very regulated. There's a lot of things you have to go through, particularly if you're in the therapeutic path and in that provider path, that makes it difficult. That if you don't understand how to thread that needle, you won't see the other side. But I do think from a population health perspective, the ability to reach the rural areas, we call it bringing healthcare to the edge. We think
Yes.
AI is instrumental for that. We have a few investments that allow that to happen. And the AI-enabled devices that are starting to get more pervasive, both in the diagnostic and the potential care side, is an opportunity. It's difficult, it requires capital, and it's a long tail. I think the largest challenge is the FDA approvals that people have to run through in order to get to the other side. I would love to see that smoothed out a bit more. If the government can do anything, I think we'd see a lot more activity and better outcomes on the healthcare side in general. But there are people, look at MIDI Health, look at even one of our portfolio companies, Emma, doing well and addressing women's health. There's a lot going on from a specific and chronic care scenario. There's tons of GLP approaches today that are working well from a remote care perspective. Uh, Other areas, I still believe that fintech is an opportunity, particularly as the rules change in terms of how you can invest out of your self-directed IRA,
Hmm.
as the entire cryptocurrency world unfolds and it becomes much more a part of your portfolio. I think the power of the AI can give you as an individual to manage your own portfolio is still unlocking in many ways. So RIAs are still trying to figure this out on a broad scale. And I think banks in general, they're highly regulated. It's hard to differentiate. And I think AI gives them the opportunity to actually offer personalized service in ways that they haven't been able to do that in the past. The third area I would say that is a constant need is cybersecurity. And AI can do a lot in that area and keep up with what's happening there in parallel to the damage that hackers and others can do in the cybersecurity space. And if you look at our infrastructure as a whole, our infrastructure needs major upgrades
Yes.
uh, in energy and utility, in electricity and water, everything. And the systems that run all of these things will require AI-driven components. And I'd love to see more digital twin things in general. I think digital twin, something I focused on X years back when I was at SAP. I really think that's a very viable space, and even more so now with simulation. And I would love to see people doing more in that digital twin and simulation space.
Very good. Well, my last question to you both is, what are your thoughts on so many traditional SaaS startups built before 2023? What do you think would be a right path for them? Do you think they're going to be able to change their products from the ground up? Will we see more exits? What do you see happening?
I'll let you go first, Bob.
Yeah, no, I think SaaS companies will have to evolve. I think a lot of them are starting to figure out how to build AI into their walls. I think if you're an incumbent, you're an incumbent. And it's hard to remove an incumbent that helps you run your business overnight. Is there a pathway for them to move off of a SaaS walls? Absolutely. And is that, I think, the biggest opportunities on the buy side. If I'm a buyer of SaaS applications, can I finally extract myself from the clutches of a large company that's been the incumbent that I'm beholden to? I
Mm,
think the answer is yes. And if you look at things like MCP and other parallels that help you extract that functionality as well as data, you start to move down that path of application independence and really get to the holy grail of best of breed that
Mhm.
you can get to. So SaaS, what SaaS companies look like today, I think will be very different in the future. Those that can make that leap and kind of do some repositioning, re-architecture. There's gonna be some tech debt that they have to solve for. And if they can do that, I think they'll see the other side. Others will probably go on an acquisition spree to try to bring that expertise within their walls. And yeah, others, there's a lot of companies that used to exist that just don't exist from our past. And that this is a cycle that typically happens. How many times has CRM been reinvented? Or, right? And it continues to be reinvented. And so MarTech continues down that path. It's a constant reinvention as we have these different channels. And I think SaaS is going to get there as well.
absolutely. I'll just say quickly, one note, if you're an entrepreneur and you're looking to do that, go on the acquisition spree, make sure that you really diligence what's there and how it fits within your entire portfolio of offerings, as well as it should enhance what you're already doing in the relationships and wallet size that you already have in an industry. Overall, I think that there will be some SaaS companies that are able to endure and be able to reinvent themselves. I don't think any easy solution like just slapping .ai on your on your website won't help. But every company should have an AI strategy if they're not an AI native company. The public markets are asking that of all companies. And, within the private markets, if you're an early investor or a traction stage investor or growth investor, you're going to be asking companies, hey, what are you thinking about for your AI strategy? And so it's going to be critical to understand, entrepreneurs are built in a way to always be thinking, great entrepreneurs always be thinking about what is their competitive advantage. And so they're thinking about how do they incorporate this into their business to make them more efficient, more output, more trust, which I think is important. Also realize and do an audit of from all of your assets, what advantages do you have in the market? Because not throwing the baby out with the bathwater to just build some AI. It's like, what do we already have here that could be a great foundation? We've already mentioned data is a great source. And another thing is having relationships and trust. And so you already have that within a lot of your customer base if you're at the traction stage or growth stage. So those are a couple of things I would just want all entrepreneurs to think about if they're running a SaaS company.
That makes so much sense. Well, thank you so much, both of you. This was very helpful. Thank you for attending, everyone.
Thank you, Sena.
Thank you.
Thanks, Ernest.